Ba-da-ba-ba-ba.
What is up, ladies and gentlemen? Do we have a show for you today? My good friend, always in the house, Milton. How are you, my man?
I'm good, Marv. I'm happy to be here. What a week.
What a week it has been. FTX is saying Bankman-Fried has broken his silence. And I'm not talking about Twitter. We know about his crazy rants on Twitter. But he's finally doing interviews, and this week he's done a lot. He's been talking a lot, Milt. He's out there, and he's talking, and we want to cover it. We want to talk about some of the biggest things that have come up, some of these interviews, and some of the reactions around the world in today's episode. You're not going to want to miss this. Revolutionary stuff. Now, Sam himself has been very careful in terms of what he says, but a lot of information is trickling through some of what he's saying, and we're going to dive deep into that and dissect it. Milt, my man, you doing all right?
I'm doing great, man. I'm doing great. Crypto winter, things are a bit chilly, but every day that passes, we're closer to crypto spring. So,
I got to say,
it goes.
It's crypto winter. It has been chilly, but things seem to be thawing a bit. There's a lot of positive indicators, a lot of positive signals that are throwing everyone off here a bit. Everyone's
so today we're going to talk about SBF because obviously it's the big news. He's got big interviews out there. But Marv, I want to right here and now.
Yeah,
I want to commit our next episode. Okay, which will probably be next week. Hopefully, we'll be doing this at least once a week.
Well, I hope so.
A fully positive, only positive video on crypto next week. Okay, we've got so much. The last few months have just been so much negative energy that next week I want to do positive only episode on crypto.
All right. Well, that's fine. Yeah, I'm good for that. Listen, if you can get out of your hibernation over there, okay, and put your sunglasses on and let the sun shine through, then things can get a little more positive because I'm feeling quite positive about the way things are going. Listen, we're getting close to the end of this year, right? We're getting close to the end of this year. And what does that mean? Well, we've got a new coming year coming up, and I'm feeling very positive about the future.
That will be next episode. Today we got to obviously talk about SBF.
Yeah, we're going to dive deep. Now listen,
and all the reactions.
If you haven't, guys, please do us a huge favor. Subscribe to the channel. Click on that little bell. That bell's going to get you real-time alerts. And smash the like button because that's
on YouTube.
That's on YouTube. Oh, yeah. And of course, listen to us on our new podcast. Well, not so new, but new in the sense that nobody's been listening, Milt. So new in the sense.
This is what I want to talk. So, to the couple of people who are listening on the podcast right now, good for you. You found us. Those of you watching on YouTube, we just want to let you know that you could either keep watching us on YouTube, or these episodes will be available, just the sound of them, as a podcast. You can find us on Spotify, Apple Podcasts, wherever you find your favorite podcasts. But I find, for me, that our show works really well as a podcast. So if you're someone, if you don't want to watch it, then you can just kind of put us in your earphones and go for a little walk, get your 10,000 steps, and listen to CryptoWise.
Yeah, 100%. I actually prefer the podcast too myself. I mean, I have a premium YouTube account, so I can listen to it like a podcast. But the podcast is great. We sound better as a podcast, I think, for some reason than we do as a YouTube channel.
Definitely for these kind of shows where it's you and I and we're just kind of talking about things, it works great as a podcast. The more in-depth videos on the altcoins and stuff like that, which will obviously start doing again. The visuals help, but as much as possible, I think we're trying to make it so it works for both mediums. Whatever your preference is, so you can do either
in that
way.
case.
And wait, I got to shout out too. Also, make sure you're following us on Twitter. Those of you who have been around for a while, who have been CryptoWisers, we lost our original Twitter account.
I think it's going to come back. I think Elon's going to bring us back, my friend.
We're hoping Elon will bring us back one day. That hasn't happened yet. So make sure you're following us at what is our kind of backup Twitter account, which is the one we're using right now. It's called @CryptoWiseGuys, @CryptoWiseGuys. So follow us there if you are not already.
Follow us there. And as a podcast, you can follow us on whatever podcast app you use. Make sure to follow CryptoWise there. Okay, enough about all the following and liking shit. Can we dive into the real goods here? Because it has been a very, very big week here, Milt. So much is coming down. Sam is breaking his silence, and he's talking a lot. I got to admit. I mean, a lot of sound bites. He's being careful, but he's out there talking. That's the thing.
No, he's been everywhere this week. I've watched, I think, all of them. So there's been kind of three major ones that I know of, at least in terms of live interviews. There's the New York Times one, I think it was. That's the one with Andrew Sorkin.
That's right. Let's hear.
That's that one there. And then there was one with ABC with George Stephanopoulos, which was a really interesting one. And then, of course, yesterday he was on one of the major Twitter spaces, Mario Nawal, I think his name is. Anyway, he hosts this huge Twitter space that's become super popular since FTX collapsed. And SBF was on there yesterday for, over an hour at least. So a lot to digest. I would say, Marv, just kind of throwing it out there, big overview of all the interviews that he did. What's the one thing that you kind of took away from all of them? Like, what's your overall impression having digested all this SBF this week?
So I think, first of all, I think we should probably go into each of the interviews a bit. But yeah, in terms of the overall, I mean, look, the overall is, I think we're going backwards here, by the way, but that's fine. I think the overall is more, in my mind, Sam is out there trying to get his narrative out there and trying to be pretty clear and stay pretty solid. He's only providing so much information. Some of it is, I found, to be incriminating. Now, here's the thing. Sam comes off as a really sort of gentle, smart, kind of nerdy dude, and that's been part of his strength, right? I mean, that's what people really loved about Sam. And so I think he knows that. And so in terms of what he's doing, I think he's really trying to get some compassion and support. But the fact remains in my mind, Milt, that either A, he's delusional, right? Or B, he is really smart, and he's trying to manipulate people into having some compassion for the idea that he wasn't purposefully conducting fraud or any of these things. He just wasn't as focused in these areas and let it kind of fall through the cracks. And that's kind of what I'm getting in terms of what he's trying to put out there, is that he failed in not focusing enough attention on these things, but they weren't maliciously fraudulent.
Okay, so this is really, in my mind, there's really three different categories that people are falling into in terms of their reaction to watching these interviews. One is he's telling the truth. Okay, everything he's saying is to the best of his ability at this point. He's trying to explain exactly what happened from his perspective. And yeah, he kind of took his eye off the ball. There wasn't proper risk management on the site, but he's telling the truth. He really had the best of intentions, and it all just kind of went to shit. The second one is that he's delusional, that he's totally just has no clue really, and has kind of created this story in his head, but he really believes it. The third is that he's kind of just a con artist, that he's totally lying. He's a total fraudster, and he's just trying to make it seem like he's not. Out of those three camps, where are you at? If you had to pick one, where would you be?
Well, it's hard to pick one. I think I'm in between 1 and 2, right? I think there's definitely some delusion there from what I can see. Obviously he didn't. In some cases, I think the reality is he was too young. Things happened too fast. It went too big for him. And so in some cases, yeah, he probably didn't have his eye on the ball. But the truth is, I believe firmly that he knew they were using users' deposits. Okay. He is much smarter than he's coming off, in the sense that he's saying he had blind spots and he didn't see these things, and then it all kind of fell apart.
Okay. So let's kind of go into a little bit more of trying to piece together what we think happened based on what he said. And
do we want to play any of the interview here? by the way.
Yeah. Well, one. Okay. So we'll play a little bits of the different interviews. First, I want to show some of the reactions from the different camps that other people are in. So if you share my screen right now, there's the one camp that we have, which is the first camp, which is that
That's
he's
hilarious.
telling the truth.
Yeah.
So we had Bill Ackman came out and he said, "Call me crazy, but I think SBF is telling the truth." This was when the Andrew Sorkin interview was happening. This is what he tweeted. And then Kevin O'Leary, okay, Mr. Wonderful, we know was a big investor in FTX. We know he was a paid spokesman for FTX. He retweeted that and he said, "I lost millions as an investor in FTX and got sandblasted as a paid spokesperson for the firm. But after listening to that interview, I'm in the Bill Ackman camp about the kid," meaning he believes that he's telling the truth.
And interesting that these guys are framing him as the kid too, right? Which helps kind of build that narrative. Oh, he's just a kid, like so interesting that they're calling him the kid. There's purpose there.
And it's really interesting. I don't know. That's a really interesting perspective. So then we also have the reaction from Mike Novogratz, which you have there. He was on a program, I think Squawk Box or one of these business programs. There again, Andrew Sorkin is interviewing.
Well, let's listen to it.
So let's have a watch of that and see what his reaction has been.
Still trying to frankly process.
You got to share your screen, Mark.
Different answers that Sam Bankman-Fried
Yeah, sorry about that.
Yesterday. Believable to you? Not believable? What was your immediate thought?
Listen, Andrew, this is the young guy who's certainly in distress. It was delusional. Let's be really clear. Sam is delusional about what happened and his culpability in it. We could all be like dime store psychiatrists, right? There's a lot of narcissism there. There's a lot of grandiosity. But being psychiatrist isn't going to really help, right? He needs to be prosecuted. He will spend time in jail. They perpetuated a large fraud. And it wasn't just Sam. You don't pull this off with one person. And so I'm hoping that the authorities get to the bottom of this faster, not just for the sanctity of the crypto markets, but for all markets, right? Markets are based on trust. And when you have trust broken like this, it questions everyone else, right? People start looking for black swans everywhere. And so in some ways, this is the story of the moment because it is such a giant story, but it's, you're seeing someone who's just spewing more lies. And listen, Sam's always been kind to me. He has a kind demeanor. That was part of the shtick. And I'm not saying he even planned this all like a criminal mastermind. What they did was criminal and they need to be prosecuted for it.
I think that's going to be the question, though. I mean, it did seem to me like he was taking the defense. Okay, if I have to pick one of these, am I a criminal or am I an idiot? He's going to go with the idiot defense. But
again, like
he had to know, right, Mike?
Sam went to some of the best university in America. He worked at Jane Street. Those guys are fiercely good.
He had to know.
I can tell you every loss I had in the Lehman Brothers 2007 crash. Every mistake we made. Traders don't forget how they lose money. It's kind of the DNA of anybody who spends their time in this field. And so it's just kind of a pile of malarkey that he says, "Oh, I didn't understand how much risk we had." I mean, these were huge bets. And they were huge bets made with my money and other depositors' money.
Mike, but that I think is the most important point about this. He's talked about this in the context of, making some bad risk assessments. And that may very well be true. But perhaps the more important component of this is whose money he was making those risk assessments with.
It's I stole your money, and then, oh man, I should have risk managed the stolen money better. I mean, it was the theater of the absurd to some degree. And, I know he's going on today at another show to try to make this case and soften up the world. Maybe that's their strategy. I saw Bill Ackman even say, geez, maybe he's telling the truth. That's Sam's strategy. I think, I tweeted to Bill, I said, Bill, I think on this one, you're crazy. And I think Bill's one of the shrewdest investors out there. Sam's compelling. That's why he was able to snooker the entire planet into believing him. Right? He's got that shtick.
Let me ask you this, though. First of all, I should tell you, I don't think it may very well be his strategy, if that's the case. I don't think it's the strategy of those around him advising him. I can almost assure you of that as somebody who's been in touch with that whole universe ahead of this interview. The question I would ask, though, is, you said, I don't think he might have planned to be a criminal mastermind. And yet the question is, if in fact what you allege or speculate happened, you would have to think he was.
Well, again, some people start off going down the path, they get in trouble, and they start breaking the law thinking they could get it back. I mean, it's a tale as old as time, right? And so you might not have started the plan of, I'm going to go rob everybody. But the moment there was one mistake, you start cheating. And then you start cheating more. And then you start cheating more. And next thing you know, you've got a $10 billion cheat going on, right?
And
this
to be clear,
why
you thought he was making not just bad choices and mismanaging things. He was doing things that he knew were illegal.
Of course. I mean, again, taking our deposits and moving them into his family office, that's a big red flag to start.
That was good.
Yeah. Very interesting. Well, what's your reaction to Mike Novogratz's reaction?
I mean, I'm in his camp. I gotta admit, I think I'm in his camp. I think I think he's right. I think Sam did things that he knew. I believe he probably started with good intentions. I don't necessarily believe that he had criminal intent in mind and this big mastermind to rip everybody off. I don't think that's what it was. But I also, at the same time, believe that he wasn't necessarily completely delusional, and he was aware of what was taking place. It may not have started that way, but he ultimately believed, in my opinion, that he could regain control of this over time and fix it. But
I'm of two minds here. This is where I actually think both can be true. Okay, this is actually what I'm kind of leaning towards right now. One is, okay, so you have these two companies. You have Alameda, which is more of a venture firm, and then you've got FTX, okay, which is a trading platform which he created. I do think FTX, especially during the bull run, was probably making a ton of money for
absolutely
him.
Yeah.
So do I think that FTX itself was a Ponzi scheme, like a Bernie Madoff, like there's no business there and he's just taking people's money and spending it? No, I think he was legitimately trying to build the biggest exchange in crypto, and that there was a ton of money, and that he probably got sloppy. The market crashed. Alameda was doing some sketchy things that he may or may not have known about, and then there was a big hole, and he was like, and there wasn't really any safeguards in place, so people's money got used to try to fill the hole, and he thought he could probably pay it back later or whatnot. So I do think there was probably illegal things going on that without maybe bad intent. But on the Alameda side, this is where it kind of gets more interesting for me, and where I do think the sketchiness of what he's doing or was doing, or what the people at Alameda were doing at the very least, is more maybe tells us a bit more. And this is the side I'm more interested in, and might tell us a bit more about the crypto industry in general and what the heck is going on. Because I do think, when you look at all the investments that Alameda made in all these projects, right? They get in on the private round of all these crypto projects. They get a ton of tokens. And I do think that they were using FTX as leverage. Like if you wanted to be listed on FTX, you probably had to deal with Alameda. Yeah. And I think, we know that they were heavily involved in the Solana ecosystem. And we saw Solana go from nothing to crazy. Like Solana last bull run was really the story. It went to... in terms of layer ones, people were like, is it going to beat Ethereum? It goes up to $260 from nothing. And we know Sam is heavily invested in it. So what was the manipulation there? That is what I'm really interested in. And all the projects they invested in, how much were they pumping that, using and manipulating the prices using FTX? I do think on that side of things, he was probably knew what was going on, was involved, and there was probably a lot more sketchy stuff going on that side of things than on FTX. I do think on FTX, I think he got sloppy. I think he thought there was probably a lot more money and the risk management was probably fine. And then eventually those kind of, he didn't really have anything
I agree
in place.
with
And it was just mismanaged, I think.
Yes, but the problem is the commingling, as you're talking about, between FTX and Alameda, right? Like, I mean, there is clearly commingling happening, and it's hard to believe that, because he's basically saying, I don't know what the Alameda people were doing. I was focused on FTX, but the amount of commingling makes it very hard to believe that he was unaware of how the two were playing into each other to a degree, right? Like, as you said, Alameda was leveraging FTX. They were both leveraging each other in ways. There was more information that came out. I don't know if you listened to it after the Twitter Spaces yesterday, of a project that has information that went to wanted to get their project listed on FTX. Did you listen to this part?
I listened to a bit of it, but that guy, that's the guy who was on BitBoy. BitBoy had a whole episode about that guy.
Okay.
But yeah,
But
that's
in short,
the
Cole's notes,
kind of stuff. Yeah,
Yeah.
talk about that, because that's the kind of stuff I'm talking about that I think probably happened all the time.
Right. So you had a project, and this is just an example. You had a project, right? A new crypto project. They'd raised a bunch of money, whatever, and they wanted to list on FTX, which is what any project wants to do. They want to get on the big exchanges. Now, in order to get on the big exchange, you have to provide liquidity. So if you want on Binance or FTX and so forth, you have to send them a bunch of the tokens in order to get in there and to have the market making capability for the exchange to actually trade it, right? And in this case, Alameda, they were then pointed to Alameda to say, hey, you have to work with Alameda. Alameda comes in as this almost venture partner to say, hey, yes, we'll be your partner. We'll get you through onto FTX, and here's what we need, and we're going to help build, we're going to help create liquidity through this, and, we believe in your project, blah, 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 blah. The same story they probably tell all these projects. And the project had to send them a bunch of their treasury, right? As I was talking about, to have that liquidity for the market making. Now, what happened, though, was they sent them a bunch of that. Now, when it actually got listed, from what I was understanding, when it got listed, Alameda went silent, and the project started getting crushed. There was massive sell-offs happening and shorting happening. And the project, from the project's position, they actually had these indicators set up to provide data as to what was going on. And the indicators started creating all these red flags to show what was happening. And basically what they're saying is that Alameda was playing a part in actually shorting this and selling this off, but more so, and they went silent. So they're begging Alameda to shut it down. What are you doing? What's going on? Alameda's not even responding. They're allowing this to happen. And then they basically went back to Alameda and said, send us back our coins. We want off FTX. This is sketchy. But what was really taking place, what it seems to have taken place, was that when a project would provide liquidity, Alameda would then take that liquidity, and normally what happens in all of the users' wallets at the same time that were sending their assets in to FTX to trade, on the back end, so the user would see those tokens in their account, but on the back end, for some reason, all of those assets were being sent off into a treasury wallet controlled by Alameda. Now, what they believe was happening was Alameda was actually creating synthetic tokens on FTX, and Alameda and FTX were creating synthetic tokens of the actual assets, taking the real assets out and controlling those assets and providing these synthetics. And what happened was, when they asked for all the tokens back and to be shut down, is it didn't add up. The amount of tokens that were still trading out there didn't add up to their total supply. So they knew for a fact that synthetics must have, some fake tokens, synthetics, whatever you want to call them, must have been created by Alameda and FTX in order for that to happen. And it was just a nightmare. But I think, just to break it down for people, what was happening was FTX and Alameda were clearly, it seems, creating synthetics. And what users were actually seeing wasn't actually necessarily the assets in their wallets. And the assets in their wallets were then being moved around and used in different ways.
There's a couple of things there. Okay, so the biggest scam, would be if you, as a user of FTX, deposit $100 into FTX in money.
Right.
Okay. And then you buy on FTX, you buy $100 worth of Bitcoin, but FTX doesn't actually buy that Bitcoin for you. It just says on your FTX account that you own $100 worth of Bitcoin, but that Bitcoin is just fake. It's just basically a digital number, pretending that you own that. And really that $100 goes to Alameda and they use it to invest in whatever they want to invest in.
Long, short, invest, whatever.
Okay. If that was the case, that to me is the worst case scenario. And that to me is a complete Ponzi scheme, Bernie Madoff. Okay. Because they're basically taking your money, saying that they're investing it in this token for you and holding that token for you. And they're really not. They're just pretending to do that. And that doesn't actually exist. That to me is the worst case scenario on that end. Then they should all go to jail for sure, forever. They're just,
but I believe that's what was actually happening.
Okay, so that would be the worst case. The next thing that you're talking about too, which is more, I think probably what was more happening, is this idea that Alameda's making these basically sweetheart deals with these projects because they have so much power, because they're attached to FTX and these projects want to be listed on
obvious.
FTX.
That's given.
Yeah. So, but what kind of manipulation of those tokens are happening? And that one project that you're talking about, in that case, they are saying they created fake tokens of our token that could not exist, above and beyond the amount of tokens that should exist. And we're totally manipulating and dumping on. So that is, but that to me is, if they can do that, this is what doesn't make sense to me, okay? If they're already doing that with a bazillion of these crypto projects in a bull run, they're basically printing money through that scam.
That's correct, yeah.
Why are at the same time, they could legitimately be building a business. FTX is legitimately a very popular exchange, which will make them a lot of money.
Absolutely.
Do they actually... Were they dumb enough,
obviously,
and corrupt enough to just take someone's money and pretend that they're giving you something,
and
they're actually not?
Yes,
Milt, they were.
Yes. Not only that, I think it was all three. You broke it down into three basically things there, and I think all three were happening. If they weren't doing that, okay, then why? If they weren't taking users' deposits and using them in different ways, right? Then where's all the users' money right now? If they weren't taking users' deposits, where is the money? This is the thing. So we know that they were creating synthetics. That's done. We know that they were we know that Alameda was playing the market up and down on FTX with billions and billions of dollars. And I'm sorry, but when you're doing that and you also own the exchange, really hard not to do manipulation in the process. So we know that they were that they were doing that. We know that they also, in addition to that FTX had created a way for Alameda not to have margin calls and liquidations. Okay, so that's manipulation in itself. And then we know that the users deposit. Sam himself in the interviews over the last 2 days or a couple of days basically said that it was happening, because what he said was that technically in their terms and conditions of a user's deposit, they had the right to do these things, and that there were superseding terms and conditions above and beyond the terms and conditions that allowed them to make these
we should
decisions.
listen to a couple of interviews, because I don't think that's what he said. I think he said basically there are spot positions. Okay. There's like in which technically they should be holding what you say they're,
that's correct.
They say they're holding. And then there's the margin trading. And most of the people on using FTX, people you and I know, I never used FTX, but I know you did a lot.
Yeah.
The reason you were using FTX was for trading.
Yeah. And he was saying the plus and minuses should equate to the same thing, and they weren't, and they were off, and the data was off from Alameda over, and this, that, and the other. But all of that is spewing shit, because at the end of the day, that should all calculate correctly, because I'm sorry, I have margin calls. I got liquidated. I lost a lot of money in liquidations over the last 24 months.
But I'm just saying there is a difference between
the system was designed to ensure.
There is a way to use FTX in which you are giving them essentially permission.
Yeah, absolutely. If you're lending your money, if you're lending your money, or you're doing any sort of margin, etc., then yes. You're in that position.
But then there was a section where if you just were holding it, or just using
a spot position,
as a wallet,
it's
then
custody.
They shouldn't have. And clearly, he said on the Twitter Spaces basically that money was basically all being put into one. All right, Marv, let's why don't we take a look at some of the interviews? Let's look at a piece from the Sam Bankman-Fried interview with George Stephanopoulos here. This is from ABC Good Morning, or whatever the heck their morning show is called.
Good morning, America. Good morning, America.
So I don't know. I actually thought George was one of the better interviews in terms of like really grilling him. And so this is kind of like towards the end where he really does try to like corner him on this idea of like, did he know that users' funds were being used?
All right, let's hear it.
For
Let's hear it.
Alameda and stuff. So let's see.
Move on, but just finally on this. This is really a yes or no question.
Yep.
Carolyn Ellison says you knew that FTX funds were being funneled to Alameda. Did you know that?
I knew that there is an open margin position there and that involved.
I know, but that's not what I'm
$1
asking. If she's in court and you're in court and she's under oath and you're under oath and you're asked, did you know that these funds were being funneled to Alameda, what is your answer?
I did not know that there is any improper use of customer funds.
You also took out a $1 billion loan. What was that for?
That was generally for reinvesting in the company. That was not for, consumption. To my knowledge, I have basically nothing left. Basically everything I had was invested in the business. I expect I'm gonna have nothing at the end of this. I think I had $100,000 left in my bank account last I checked, and I think I have, one credit card working with that right now.
Earlier this summer, you thought you had, what, $32 billion?
Probably 20, but a whole lot more than I do now.
I can't imagine what it feels like to go from $20 billion to
Wow.
$100,000.
Yeah, it's been a really humbling fall in a lot of ways.
How do you explain the failure? Was it inattention, arrogance?
It's a good question.
Was it unethical?
Some part of it was just literal distraction. I really should have spent some time each day taking a step back and saying, what are the most important things here, right? And like, how do I have oversight of those and make sure that I'm not losing track of those? And frankly, I did a pretty incomplete job at that. I spent a lot less time looking at assets and looking at balances and positions because that's not where revenue came from. And so I wasn't seeing it as a core business driver. Obviously, it was a core risk, and that was a huge mistake of mine to not think more about that.
You said one of your great talents in a podcast was managing risk.
That's right. And
well, it's obviously wrong.
Well, I think that there's something maybe even deeper wrong there, which was I wasn't even trying. Like, I wasn't spending any time or effort trying to manage risk on FTX, and that obviously
that's
that
a
was
stunning
a mistake.
admission.
What?
That's a pretty stunning admission.
Yeah, I mean, I don't know what to say. Like, what happened, and like if I had been spending an hour a day thinking about risk management on FTX, I don't think that would have happened. I think I stopped working as hard for a bit. Honestly, if I look back on myself, I think I got a little cocky, maybe more than a little bit. And I think part of me felt like we'd made it.
As I said,
felt like he made it. I mean, he was worth 20 billion. I love how he corrected it. You were worth like 30 billion. No, actually it was 20. So he's definitely looking at what he's worth on a daily basis. He knows that number. But
there's so much interesting stuff in there. There's so much stuff to unpack in there. So that first kind of thing where he's like, this is a yes or no question. Caroline Ellison, she said that you knew, and that idea of like, okay, if you're in a court and she's saying this and you have to answer yes or no of like, did you know that these funds were being used inappropriately? And then there's this long pause, and watching him through that pause is crazy. But like, and then he comes out with the like, I didn't know of that any funds were being misused or not. There's definitely a bit of like in that answer, you're kind of like, okay, so is he relying on a bit of like maybe some of the fine print of what they were allowed to do?
Well, this is why I go back to what I said earlier in the show, right? Was that he said in the Twitter talks, he focused on the idea that there was this terms and conditions, and he felt like that he had just cause to use those funds. And this is why I keep going back to that, because in his answer there, I agree. But in his answer there, he basically, there was that long pause, which I agree was fine. Look, you can see his brain working. Is a very crafted answer. He's trying, it's an answer to try to keep out of jail, basically. And he's saying, I didn't know that we were doing anything wrong. So his intent, he's trying to make clear that his intent was genuine and that he didn't knowingly do anything wrong. But what he's not saying is, I didn't know we were using users' funds. He's not saying that. He's saying, I didn't know we wrongfully, he's saying, I didn't know I'd wrongfully used user funds, because and then if you take that and you go back to yesterday where he's saying, well, our terms and conditions say that we can, technically, that's what, when you put all that together.
Also, okay, but there's also these two, there's like a big question here in terms of like, I think in terms of semantics for him when he's answering that questions about like, did the funds go to Alameda for Alameda to spend? Because then the next question is even like, to me, is an amazing question. And it's kind of crazy that this like George Stephanopoulos guy, who's just a regular kind of political interviewer or whatever, he's not even into crypto, and he's kind of getting at the heart of this better than some of the crypto people who were asking questions. But that idea that, okay, so he nails him on this idea that he took $1 billion loan from FTX. Personal loan, I guess. So you're like, okay, why? And then he kind of claims that it was to like purchase other businesses or reinvest in the business. Why do you take $1 billion loan from a business to reinvest in the same business? That doesn't make any sense.
Especially when you're saying you're worth $20 billion. Now, he didn't say,
but $20 billion on paper, but like a lot of that is probably in the FTX. The value of
and FTT and all that. But
But if he just, so like, I'm just saying, like,
he didn't
maybe
say
a lot
it was
of those
from
funds,
FTX though. He said you took $1 billion loan. He didn't say it was from FTX, the loan.
But I'm pretty sure that was from FTX. It had to be from FTX. Who's he taking? So I think, so that's one of the major questions is like, okay, so did Alameda take a bunch of the money, or were they actually taking money out of FTX to do, or just spending a lot of customers' money on things that, like, were they spending more than they were actually bringing in terms of all these big endorsement deals and celebrity endorsements and all that kind of stuff, or even all this real estate that we know that they own now in the Bahamas and stuff like that? Maybe that's more where the money goes to. But anyway, he's also, he keeps going back to, so in this interview, in all the interviews, and especially the Twitter space thing, he keeps going back to this idea that Alameda was trading on FTX, and like, it sounds like they had a huge position longing crypto.
Yeah.
And clearly the market was tanking, and they had all their collateral in FTT, I'm imagining, because that's what you needed your collateral in. So that to me is where I kind of get a bit confused, is like, that seems to be his big defense of like what went wrong, was that essentially Alameda was under collateralized in this huge long position.
Well, it kind of makes sense, right? Because so he is saying that, and it was backed by FTT, and he did also say that he didn't expect the market downturn to be as drastic as it was. And if you take also into consideration the fact that they didn't have Alameda, sorry, I was calling it Alameda earlier. Alameda did not have any liquidation calls, and so if they don't have a margin call, right? Because the system is designed to be automated to ensure that if you make if I went in and I made a long or a short, I needed X amount of margin, and if it fell below, it would automatically liquidate that second to ensure that the system doesn't go in it doesn't go in a negative, right? So my margin needs to cover my position. If you have a $5 billion long and you have no margin call, and technically, let's say that on your $5 billion, if it goes down, the market goes down 30%, and I'm an average Joe, I'd be called on that and it'd be liquidated, right? Because I go into a negative position. You don't have that. You don't have that liquidation call, and now it's down 80%. Well, whose money are you using at that point? You don't have enough margin to cover the spread, so now you're going into the company's pockets. And
okay, but this is where it gets kind of confusing. So one, there's been a lot of rumors that Alameda was able to trade on FTX and it didn't matter. They could never get liquidated. Mm-hmm. So those rumors were going around, but clearly those rumors aren't right if he's talking about their collateral and their position being in jeopardy. But then two, okay, we know
that doesn't justify.
we
That
know
doesn't
that,
necessarily make it wrong. But okay.
Well, there's no concern if they can just keep that long going forever and ever and ever.
No, what I'm saying is we don't know we don't know if that little soundbite that you said that he responded with is true or not. Like, we don't know if the rumor.
No, I'm
is
just
true.
saying this was a rumor going around
yes.
that people had been talking about that
Yeah.
that still
It's
has not been
unconfirmed.
answered.
Yes,
it's unconfirmed. The other thing is, okay, so Caroline or whatever her name is, his little girlfriend there, his ex-girlfriend. One, the fact like getting to the bottom of like that, and that like, was she even, like, he appoints his girlfriend or ex-girlfriend to be the CEO of the venture firm, like that. The fact that that wasn't
interestingly enough, that got brought up yesterday in the Twitter talks, and he got very defensive about it. He got emotional and defensive about it. And
I mean, I don't want to, like, all the sordid rumors and stuff, like, forget about that. But just it would be interesting to just know, like, from him, and like be like, okay, so did you just appoint her CEO of Alameda because you were together or you liked her or whatever? Like, was that a huge mistake? I mean, clearly it was, but just hearing the ins and outs of that would be interesting. Not from a, like, I definitely don't want to hear about any of their fucking
sexual affairs. I do. I want to hear about it all. And I want to see sex tapes and anything you got, you send it my way. But but
going back to my point, she tweeted, remember when CZ sent out that tweet about he's selling FTT, and then she tweets out, I'll buy it all back at $22.
Right.
And then everyone was like, okay, we know what the margin call is. It's clearly $22.
Yeah.
It's just okay. So if that is true though,
right.
Okay, this is the thing, is it does go back to the idea of, if Alameda is trading on FTX, okay, if you and I trade on Binance, okay, we do in our trading, and we get liquidated, as I have in the past.
Right.
Who's taking that money? To me, it's like playing at the casino. I'm getting liquidated by Binance. Am I not? Aren't they taking that money from me and paying out the other side to the winners?
Yeah.
So if Alameda gets liquidated on FTX, is basically what he's saying is they owed, because they got liquidated, were there a bunch of shorts that needed to be rewarded, and therefore they didn't have the money to reward the shorts because they couldn't. The Alameda money was actually fake money and wasn't really real.
That's the whole thing.
Therefore,
that's the whole thing.
And that goes
back to the synthetic tokens within their whole friggin' ecosystem. Because it's not really,
because that's very different than the synthetic.
No, but this is
where I'm saying there's so much to unpack here. There's the whole, like,
I think it goes together.
The house. Well, why does it go together though? It doesn't go together.
I'm saying it goes together because if you don't have enough, to cover the spread, right? If you don't have enough to cover the spread, they got to get the money from somewhere to pay out those other shorts. And if they're using synthetics in customers' wallets and the real assets are being used in different ways, then technically they're paying out those shorts using inappropriate money. But that money's not being shown as being used. It's still sitting in my wallet showing me I have X amount of Bitcoin. So what I'm saying is, when you commingle like that, and you include synthetics, it allows them to maneuver and manipulate behind the scenes. So what we're seeing in all of our asset wallets, it may not actually be there anymore because of their position that got crushed. But they can show as if it's there and everyone still has their assets and they're still able to pay all the other short guys and blah, blah, blah. And the whole thing doesn't crash because you have these synthetics.
To me, they're different things. I get what you're saying.
They're different, but you need it
different
to
things because, let's just go by this. Let's just go through this very simply, as layman as possible. If he's telling the one thing we don't know is if he's telling the truth about anything. But the thing he keeps talking about is this Alameda's long position on FTX.
Yes.
They took a huge bet long on crypto. We don't know exactly what coins, but basically on the whole market, let's say. So let's say and they're using FTT as collateral.
Yeah.
So that in itself is effed up because they created FTT. So they have a majority of the FTT tokens to basically use as collateral, which gives them clearly like way more opportunity to protect their long or short based on the FTT that they own. But clearly their collateral basically they were going to get liquid. So Alameda clearly at some point was liquidated in that long. Let's say it was the 10 billion gap. Okay. So Alameda owes FTX 10 billion from effing up on their long.
Right.
And so but that's assuming that on the other side, there were equal amounts of shorts for $10 billion.
Right.
All at once. Like that's what I feel like. I just want to get to the bottom of very specific questions about kind of unpacking these things. And I don't think we got that out of any of the interviews.
No.
Yet.
And the only one that can really answer that is them. Right. And I wonder if she's ever going to talk. You know, interestingly, she was in the Twitter spaces yesterday listening.
Oh, she was?
Yeah, she was there. And so when he got called out on her and he was, I forget who called him out, but suggested that he was throwing her under the bus and blah, blah, blah. He got very defensive and she was there. And so at some point, is she going to surface? At some point, is she going to speak? And where is their relationship now? That's going to be an interesting thing to find out what happens there. But yeah, I mean,
he also said in that Twitter Spaces that she was not in the Bahamas when all this was going on. So he was talking more to some of the other people, FTX. It does seem like, and he did kind of admit that they had a relationship,
like a falling
out
out
in one now.
Right.
Well, like a romantic relationship that ended at some point. I mean, there's just so much. I guess the bottom line for me is he did a ton of interviews this week. We got like a convoluted, idea from him, what he thinks happened.
Yeah.
We don't really understand exactly even what he's talking about in terms of this Alameda long and all this kind of stuff. But we didn't even touch upon all the other crypto corruption that could have been happening at the same time.
No, we didn't.
And so we really don't know. I think there's just so much more to come out of this that we really haven't even scratched the surface, really.
And everyone's asking, is Sam going to go to jail? Here's the question. So, today, after a bunch of these interviews, an article came out saying that the DOJ is seeking independent probe into FTX bankruptcy following allegations that disgraced founder Sam Bankman-Fried engaged in fraud, dishonesty, incompetence, misconduct, and mismanagement. Do you think that Sam will ultimately end up in prison from all of this? What do you think?
I think he's going to, yeah. I think it's going to take a really long time, as these things do, but I think eventually.
Well, they don't. I mean, look at Bernie Madoff. I mean, that he was being prosecuted within like 5 days of the uncovering of his scandal. And so this has been.
But that's where I think this is. I don't think this is a Bernie Madoff case. I don't think that it's a Ponzi scheme that's going to be very easy to be like this.
I agree. I don't think it was designed to be a Ponzi scheme. I think he made really bad decisions. I think some of those decisions were illegal and fraudulent, whether he was delusional about them or not, and whether he felt like, our contracts allow us to do these terrible things or not. That's up for debate. But I think regardless of his whether he believed it was illegal or not, it's clear at this point that what was happening was illegal. I mean, you can't. And this is
that's what we're gonna find out. But I do think it's going to be hard. It's not going to be just black and white. I think it's going to be.
This brings up this brings up something really good too. When you talk about regulations, right? And there's a lot of fear about regulating and cryptocurrency, this, that, and the other. And even me, I've been skeptical about future regulations and so forth and so on. But when you looked at these interviews and Sam talks about it, he almost boasts and is very proud of FTX US and saying, listen, FTX US, all the deposits should be there. There's no reason they shouldn't be released. Everything there was done properly, right? Well, that's because the U.S. is so highly regulated, and he would be too scared to misappropriate deposits from FTX US, and so it was all one for one, et cetera. And so if we move into an economy where regulations actually have,
but the other key point there, because it was FTX US and also FTX Japan, I guess, in the same boat, is you couldn't do leverage trading on those
you couldn't do the
platforms.
derivatives trading, and they kept it very marginalized. And so
I don't even think like the FTX we know, like the kind of money printing business that it was all the international stuff.
But
like, FTX US in comparison was a tiny little company. So like I agree that the regulation obviously helped those customers, but those customers were also very limited in what they could do on that platform.
Yes, but there are platforms that are regulated that do allow derivatives trading. They just don't give you the same amount of
in crypto, like crypto ones in the US. I'm not really like, because I'm not in the US.
Yeah, there are derivatives trading. However, it's like 1-2x. It's not 100x. They're not allowing these ridiculous amounts of leverage, right? And so I think ultimately, I'd be happy if you got rid of friggin' derivatives trading for crypto, because it would allow a healthy growth of the cryptos side of the world, which we're more focused on, to be honest with you. I mean, yeah.
Well, this is the big thing about the financial, all these kind of instruments and packages and stuff of the traditional finance getting into crypto. This idea of like, and you and I were in crypto when this first began, the idea of being able to do futures on Bitcoin and stuff. Like the whole point about Bitcoin is there's only supposed to be 21 million of it, and there's probably 5 million of that lost. And then you have guys like Sam Bankman-Fried and FTX basically creating millions of fake Bitcoin IOUs out there. And then it kind of does ruin the whole thing. If you can just kind of create paper Bitcoin as much as you want without it ever having to be backed by anything real, then obviously that to me has kept the price of Bitcoin specifically way down.
Yeah, I agree with you. I think, look, I do think that I think all this futures and shit really screwed up crypto for a lot of it, but it also brought a lot of attention to it and a lot of money to the game. And so it's hard to make, the decision whether it was good or bad. But ultimately here, I think, Sam, he's in deep. I almost feel sad for him. I don't know why, but when he talks about, I was worth $20 billion and now I have $100,000 in my bank account. I mean, there's a part of me that has compassion and actually feels sad for the guy. Like, regardless of the pain, I lost money. He stole my money. I mean, I still somehow have a human element to this where I almost feel bad for him. And so,
I mean, it is a bit of like, watch what you wish for, like we look up to these kind of guys who reach these heights and this wealth and stuff. And they're the ones who always crash down. Like, and it's kind of better to be like somewhere in the middle. And just kind of like, just kind of don't get too big for your britches, But I do think I don't really feel bad for him. I do think ultimately it's his own doing, and he screwed way too many people over. So in the end, it's like he gets to tell his story, kind of gets to be the sympathetic guy, but it would be, I'm sure, heartbreaking to hear if we could hear from all the people and all the stories.
Oh, there's people that have committed suicide or want to commit suicide. Yeah. I mean, I know people personally that have lost their entire life savings, right? It's very, very, very sad. And I think, it's going to be interesting. This is not over yet. I mean, he's just started talking, really, guys. Sam Bankman-Fried has broken his silence over the past week, and he's been out there doing as many interviews as possible. And it will be interesting to see what more comes of this. I think regardless of the sound bites, regardless of, how careful he's being, he's providing, and if you take all the bits of information, you can start to really make a case here. And you can start to really, I do think so, but
for me, it is like what's kind of the bottom line for me is okay, there's the idea that users' funds were being used, in appropriate ways. And to me, if that is proven, that will be fraud and he will probably go to jail. Others will probably go to jail. But that just, for me, that just means it was just a terrible exchange run badly by people who had bad motives. What will be more interesting is to see if the truth of the dark side of these crypto comes out from this. The backdoor wheeling and dealing between projects and exchanges and token and the tokenomics of things and the fake tokens and fake volume and all that kind of stuff, to me, is more important in terms of crypto moving forward in the long run, and how it's going to affect the next bull run, and what kind of projects launch, how they get launched, and does it become a fairer, a more fair playing field for everyone. That, to me, is kind of the more interesting element of it.
Is this going to be the silver lining? Is there a silver lining here?
Yeah. But the scary thing is also that we're waiting, is obviously this is a huge story everywhere. And so regulation, how is this going to affect the US regulation? And so we just saw here, I don't know if this was earlier today or yesterday too, but Andrew Sorkin, the guy who also interviewed Sam Bankman-Fried, he interviewed Janet Yellen. And obviously what comes up is crypto and Sam Bankman-Fried, and they're going to use this as
let's listen to this for a second.
Yeah. Okay.
But I thought you were very skeptical of crypto.
I have been skeptical.
As I have been. And then there was a period of time where I thought, as this train seemed like it was leaving the station, I think a lot of us who were so skeptical thought, are we making a mistake? Is there something real to this? What's happening here? And I was sensing from you a little bit of, oh, well, maybe we actually have to figure out what this thing is, because maybe the whole thing actually is real. I don't know. Well, where are you now in light of SBF?
So I have been skeptical, and I remain quite skeptical. But I will say, look, we have to be open to financial innovation. Financial innovations can bring benefits. We know, for example, that cross-border transactions are expensive and time-consuming. Some transactions we make are more expensive than they would ideally be. And in terms of financial inclusion, a significant share of the population doesn't really have access to affordable financial services. So to the extent that the crypto world could deliver faster, cheaper, safer transactions, we should be open to financial innovation. That said, that's not what most of it has been about. And I have strongly believed and continue to believe, and I think everything we've lived through over the last couple of weeks, but earlier as well, says this is an industry that really needs to have adequate regulation, and it doesn't.
But here's the regulatory question. If you don't believe in the underlying thing, and the underlying thing is living in this global universe that's oftentimes offshore, how does it work to regulate it onshore?
Well, we certainly need to work with our allies, and we are involved in global discussions, and the Financial Action Task Force is involved in...
Were you surprised about this whole Sam Bankman-Fried of it?
Well, of course I was surprised. It's not something that I expected to happen. But look, I've worked with other regulators through the Financial Stability Oversight Council, and President Biden ordered a comprehensive look at regulatory holes. We've put out 5 or 6 reports on where the holes are. Our first report, the President's Working Group on Financial Markets, we put out a report on problems with stable coins, which are cryptocurrencies that aim for a fixed relationship to the dollar or another currency, and said, this is an area where there are significant regulatory concerns and the possibility of the equivalent of bank runs. The ink was barely dry on that report, and what happened, we saw a run on Terra and Lunar, and Tether, which is one of the larger stable coins, also broke the buck and say, look, you want an object lesson, these things can happen? Look, it just happened. And more recent reports have pointed to a broad range of concerns. So protection of customer assets, segregation of customer assets. If you put funds in a brokerage firm and trade in the equity markets, you can be assured your customer funds are safe.
But you're telling the American public you should be allowed to trade crypto, you shouldn't, you should be allowed, but you shouldn't do it? What are you telling them?
Well, we want to make sure that they have adequate customer protections that we require in every other regulated exchange.
How worried are you about the lobbying?
Information.
How about worried about the lobbying that's gone on with crypto? And by the way, Sam Bankman-Fried was a major Democratic donor, as you know. You didn't ever meet with him, did you?
I've never met with him. I think I won't begin right now either. So.
I asked the question though because I think there's a lot of people in the public who say, "What's going on here?" and whether there's too much money sloshing around, too much influence peddling.
Well, there is influence peddling in a lot of different areas, and so that money certainly does influence politics and the ability to regulate. And crypto is certainly a good example of that.
Well, at least she's honest about that. That's kind of the gist of it. I mean, I think, yeah, I don't know. Like this is the scary thing, man. It's like, it sounds like this definitely is opening the door for, because, she talks about the technology of blockchain as being this like cheaper, faster way to transact,
right? Which
it is obviously, but that's obviously just one use case for blockchain. But it does sound like kind of an in for governments to say, yeah, we believe in the technology. The technology is better. So we're just but we'll create the digital dollar that we can use. And because we can't trust, anyone else to do it. That's the worst case scenario.
Yeah, no, agreed. I mean, I'm not against protecting consumers. Obviously, like, we're not American.
No, but this is the crazy thing. Like, what are you talking about? Like, they could be doing that already. The idea that an exchange has to hold 1-for-1 reserves, or that a stable coin has to hold 1-for-1 backed reserves, they could have done this years ago. Like, this is the infuriating part is that they're like, them not doing this has caused all this problem.
Well, what do you mean? I don't understand what you mean.
Those are easy ones.
They have been doing this in the U.S. for a while now.
Well,
the U.S. doesn't control the world. Like the U.S. exchanges have had to have reserves for a little while now.
No, but they won't allow them to be actually like official financial like institutions.
Right.
They're basically they have to like, and it's not that clear, because they won't talk to the crypto people. So the crypto people are basically just doing like their best guess.
Yeah. No,
to
that's
be like,
true.
okay, and then but the stable coin aspect of it could have been solved. Like clearly they know about it. She called Luna lunar, but but they know enough about it to know that it would be how easy would it be for them to regulate stable coins and be like, yeah, it just has to be backed. If you're giving out one USDT or USDC, you have to prove that you have that $1 in the bank. That alone would help crypto so much. But they wait for these, but instead of being, helping crypto, it does seem like they love taking this bad news and using that as an excuse to kind of further the idea that there's something bad about crypto, as opposed to that there's just some bad people in it.
Yeah. Well,
anyway,
this doesn't help our cause. I'll
sure.
tell you that. These types of incidents don't generally help our cause when it comes to government and regulators and red tape and bullshit. So, thank you, Sam, for not only stealing our money but making it more difficult.
Oh my God. Yeah. The damage he has caused. I do think that's the thing. Big picture for me, I guess it's like, what does this actually mean from a practical point of view? I do think it's going to take months to unwind the FTX situation in a way that is going to make it hard for liquidity to come back into crypto for a while. I think it does prolong the time, that we're in this crypto winter. So just timing the market and stuff like that is a bit tricky because we know regulation is coming and we don't know what that's going to do to the market. And we know that there's going to be some FTX dominoes to fall We don't know, and it's
yeah,
going
and
to
we're
take probably
seeing, we're
months
seeing
for
them.
that
And I
timeline.
agree. This is a setback for sure. But at the same time, I mean, looking at the markets, and we'll get into this in a future episode, but looking at the markets, considering what we've just endured, it's hard to believe that worse can come than this at this point. I mean, after, we're already in a bear. We've already seen huge losses over the last X amount of months. And then you've got like a black swan like this, that generally means there's a lot of opportunity around the corner. Like Bitcoin is now still around between 16, 17K and et cetera, et cetera. I mean, it could be
I do think
a
that
signal.
we could be close. I do think we could be close to a bottom. It does feel like those who would sell are going to have sold for the most part. We don't know what's going to happen with the FTX, all the crypto and FTX.
Yeah.
But it's more my concern is not about the downside. It's more how long before the upside can be realized because of the lack of liquidity in all the crypto
Right.
players right now.
Yeah.
And just in the general macro economy, and then also just waiting on the regulation, because I definitely don't think there's going to be big liquidity coming back into crypto until there's some clarity around that, and that could take a long time.
I agree with you there.
That's all.
But, the next episode's all positive, so keep your depressing thoughts to yourself in the next episode.
Next episode, I can't wait for that one. That one's going to be way more fun. All positive, all the time. Next episode of CryptoWise is going to be sunshine and roses.
Sunshine and roses. Don't forget, guys, if you haven't already, please do us a huge favor. Smash the likes. Follow us. If you're listening to us on a podcast, make sure to follow us. We're on all of the podcast channels. And if you're on YouTube, smash the like, subscribe to the channel, click on that little bell. And, of course, follow us on our Twitter. We talked about it earlier. I think, what is it? Our temporary Twitter is at CryptoWise Guys. Is that right, Milt?
That is correct, Marv.
That
at
is,
CryptoWise Guys.
We gotta fix this banner. It says at CryptoWise Daily. That's our old official Twitter that has been hacked and taken down. Anyways,
I'm glad we're on top of these things.
we could talk about this forever. It does.
Our channel is has worse management than FTX.
Oh
did,
God!
apparently.
No, we have great risk management here at CryptoWise. Fantastic risk management. But this is not financial advice, guys. This is not financial advice. Do your own research. It does look like here BitBoy Crypto is going to be interviewing Sam Bankman-Fried. Now, I do feel for BitBoy in the sense that he's told a couple of weeks. I'm not sure that Sam's going to have a couple of weeks, to be honest, before people come and shut him up, because I just really think, I know he's going against all of his lawyers and everyone telling him, hey, plead the fifth. Don't speak here. Don't speak. Stop speaking. I kind of feel like something's going to happen here in the near term to Sam, where he's not going to be able to speak much longer on this topic. But hey, who knows? We will see. We will see. And we will continue to follow this story along with other breaking news here at CryptoWise. Milt, it's always fun, man. It's always fun connecting with you and shooting the crypto shit.
Always a good time. Thanks for the convo, Marv. Thanks for all the CryptoWisers listening or watching out there. Really appreciate it.
Love you guys. We'll see you next week.